All right. What is good, my traders? Welcome back to the channel. It's your boy Daniel FX here. This is day 7, episode 7 of the Indices BootCamp. Apologies about the webcam that I'm using in today's episode. Usually, I'm using an external camera. Today, I just decided to use my webcam because I can't be bothered to put up the other camera because I'm actually using it for something else. Which is why this seems to be in like 2 FPS. No idea why it's doing this. Really and truly, it was working fine earlier. But anyways, I'm sure you guys don't really care. You're not here to look at my beautiful face. You're here to actually look at the charts and learn something. So yeah, we'll be fixed for next video as it is. But yeah, anyways, in today's video, what we're going to be going through is breakout and fake out movements. We're going to be going through some depletion. We're going to be going through some BOS and chalk stuff, which again, I'm sure you guys know, but we're going to be going through that in terms of entry confirmations. We're going to be going through stop loss placement. And then we're going to set some targets and whatnot for the next session, where we begin to build off of that TP, so take profit placement. We're going to go into some smart money concepts like order blocks, liquidity, fair value gaps, equilibrium, etc. And then we're going to circle back around to the psychology. So we're making progress. We're slowly building little building blocks that go into the trading plan. And this right here is the next step. But first and foremost, what are we up with? We're up with depletion. Depletion is such a crucial point in my trading plan. It's such an important aspect to how I actually like to trade, because I use depletion for a number of various things. I use depletion to let me know when I should exit a trade, when I should be looking to cover my risk, move my stop loss to break even, when I should be looking to take partials, when I should be looking to take an entry, when I should just be paying attention. Depletion is, for me, a major aspect of everything. Now, what actually is depletion? Again, I know I've probably made a lot of videos about depletion. Some of you guys may have heard it hella times. You've been on the Learn and Earn for the past year, and you've seen me live stream my trading. You know I'm literally talking about depletion every day because it's everywhere in it. So there's two main types of depletion. And again, now that I keep looking at this camera, it's really bugging me out. So hopefully you guys don't care as much as I care, but it's throwing me off. But anyways, depletion. There's two types of depletion. There's a depletion candle, which is a singular candle formation. And that shows you the first indication of depletion. It's considered a depletion candle, which I'm going to show you here in a minute. And then you have depletion, which is is over the course of a couple of candles. For the purpose of what I'm teaching you guys, when we refer to depletion, we're not referring to a singular candle. We're instead referring to an accumulation of a couple of candles. Now, if you were to maybe be trading a forex pair and you're looking at a higher time frame, the 4H, the daily time frame, for example, you want to look at a singular depletion candle and use that as your depletion and use that as your confirmation for whatever. But in the context that we're using it in for the breakout movements, for the entries, for everything that we actually use it for in our trading, we're doing it on a 5-minute time frame on the indices, which means that you're going to have a couple of candles that accumulate and show you depletion over the course of 3, 4, 5 candles. So what actually is depletion? Now, if you guys are paying attention, you remember in session 1 we were talking about market sentiment, how the market's always got these impulsive and corrective waves, and how each candle, when you actually look at the body of the candle, it's got a set percentage strength. So I gave this analogy in the first session, and again, if you don't know what I'm talking about, stop watching this video right now, go back, watch episode 1, episode 2, whichever episode it was the first technical session, and actually go look at what I was talking about, then come back to this video. But essentially, each candle and each body and wick, etc., the ratio of the body and the wick is going to create a percentage strength. So when you have a large body candle and a small body wick, or not a body wick, that's not a real thing, but when you have a large body and a small wick, you have a strong sentiment candle, so a strong percentage strength. Now, in episode 1, I gave the analogy that each candle has a set percentage strength. So, for example, a huge body and 0 wick projections either side is an incredibly strong sentiment candle, because that means price is opening, immediately pushing and closing at the highest point, for example, which means that is a 100% strength bullish candle, because there's no bearish resistance, there's no sellers in the market, it's just moving and it's closing, 100% strength. Now, if you start to add a little bit of a wick projection, you start to maybe slightly decrease the size of the body itself, you start to lose a bit of that bullish strength. You're starting to lose a little bit of that bullish sentiment. So maybe you go from 100% strength and 100% certainty to 95% or 90% or 80%, so on and so forth. And again, as you gradually begin to play around with the ratio of the body and the ratio of the wick, and you begin to increase the size of the wick projection and decrease the size of the body, you slowly start to get more and more indecisive until you're eventually printing candles that look like this, that have large wick projections either side and literally a body that's completely flat. and that's when you have the completely indecisive candles. Now, essentially, what depletion is and what this is all about is identifying the shift in momentum, identifying that gradual change in the behavior of the candles, a gradual change in the direction the market is trying to push, and we're capitalizing off of that for our entries. So, just to give you an example of what I was just speaking about a second ago. So, looking at these two bullish candles right here. Again, notice how there's no downside wick rejection. That means we opened, immediately pushed up, and closed as far up as we possibly could. Again, there is a slight wick rejection right here. So let's say that this right here is an 85% strength candle. Very, very strong sentiment candle. Immediately after, we have another super strong push to the upside, but notice how now we've got a larger wick rejection. So the sentiment or the strength, let's call it, from this has slightly shifted, and we've got a slightly larger wick rejection right here. Granted, the body's still pretty big, so in this context, I would still consider this like an 80-something% strength candle. But you can see that just due to the nature of the candle, due to the fact that there's a larger wick rejection on the back end of this candle, you can see that there's now signs that there's sellers in the market. There's now signs that there's maybe a key level up here. Price is reacting to something to cause it to actually reject like this. Now, let me actually locate a good example for you guys right here. All right, cool. So right here's a fairly good example. Now, I didn't want to spend too long looking for like the perfect example to demonstrate this to you guys, because there's no point me sitting there finding a perfect example and then you guys go ahead and you backtest this and you try to find it in the live market and you can't find it because I showed you the most picture perfect like scenario. You see what I'm saying in it? Again, the market is not perfect. Technicals are not going to be perfect. It's always going to vary. It's always going to like alternate slightly dependent on what you're looking at. So it's just learning the general characteristics and learning to adapt your plan. Now, right here, we're on gold and we're on a 5-minute time frame. Cool. Now, again, depletion is that gradual shift in momentum. It's that gradual change in the behavior. So you're going from super confident, super strong in one direction to losing momentum in that direction, to becoming indecisive, to then shifting in the other direction and eventually moving off. Now, again, this may manifest itself in various different formats, again, depending on what time frame you're looking at, on what instrument you're trading, etc. I will give you a couple scenarios and a couple of pointers here in a minute. But first of all, let's look at this example. Now, usually, depletion will happen on the back end, so after an impulsive movement. Again, coming back to session one, and this is why I really made an emphasis in session one, that the impulsive and corrective waves are the foundation of everything. So usually depletion will take place on the back end or at the end of an impulsive movement. So once price has had a large breakout, it's had a large push, it slowly begins to lose its momentum. It slowly begins to lose the buyers or the sellers or whoever got it in that direction. So right here, let's look at this example. So right here, we have a bearish impulsive movement. We have a lot of sellers that have entered the market and price is pushing pretty strong bearish. Now, notice the strength of these candles. Notice the size of the wicks, size of the bodies, the ratios, etc. Now, again, this is not the best example because I didn't find a picture perfect example for you guys, but you can see that we've clearly got a decent, strong sentiment push to the downside. Granted, we're still leaving wick rejections and the bodies aren't crazy big or whatever. But you can see that we've had like 7 or 8 consecutive bearish candles. Price is clearly pushing. We're rejecting, etc., but we're pushing. Now, at a certain point, as we approach this level down here, notice how the wick rejections start to get bigger. So right here, we leave a slightly bigger wick rejection than we previously left. Immediately on the next candle, we're now leaving smaller bodies. So again, as soon as the bodies start to change their sizes, that's how you know there's actually resistance. There's actually something happening in that area, because not only are we now leaving wicks, but we're also decreasing the size of the bodies. So again, looking at percentage strength. Now, when I say percentage strength, I don't want you guys to actually sit there and number everything and be like, this is X percentage or X percentage. I'm just giving it to you as like an example to help you like kind of visualize the information I'm saying. But let's say this is like 65% strength, just as a random number, 65% strength. We then go maybe like 64, because a slightly bigger wick projection. We then leave in a smaller body. So now price is struggling to actually move anywhere. So now we've dropped down to about 40% bearish strength. Now on this one, we actually regained a little bit of strength, but we leave a large wick rejection. Now notice how the size of this wick rejection, the actual wick, is bigger than the body. That means we attempted to move a lot further than we actually closed. So again, slightly weaker sentiment. Right here, about 35, 40. Again, it varies. Now we go from strong bearish to slightly weaker bearish to slightly weaker bearish to slightly weaker bearish. And then eventually what happens? So we go to an indecision bullish. So again, it's that gradual shift. We've gone from strong to weak to weaker to indecisive bearish. and now we're slowly shifting to bullish. So now we've got an indecision bullish. Naturally, price is going to stall here for a little bit, but the idea is that you see that gradual shift. So the exact same thing you saw here, you see that gradual shift in the other direction as price takes off. Now, granted, this is not a good example because price actually ended up coming to the downside anyway, so this is not something you would have entered off of. But the general sort of idea is after you've seen that depletion and that slow shift in momentum, you're looking to enter on the back end of this sort of movement because price is showing you that, okay, cool, it's finished the retracement, it's held whatever level you're looking at, it's had that gradual shift, and you're looking to enter to take price further up. So this is just one example. I'm going to show you another one here in a minute. So right here's another great example. Again, just paying attention to the characteristics, the main behavior. We're not looking at overall structure, just this main little segment right here. This little movement, these little 5 candles would be your depletion. Now, whenever you see an accumulation of wick rejections, that's your first indication, that's your first sign to pay attention. There might be depletion taking place here. Now, not every section of price accumulating, not every like little period where price leaves 5-6 wicks is going to be considered depletion. Depletion is necessarily that shift in momentum that I was talking about. It's like gradual change in behavior. So when you just get price consolidating and it's moving sideways, you can call it depletion. Technically, it is depletion, but it's not depletion in the context that we're trading it. So just remember that. But right here, again, looking at the behavior, what has happened? Once again, strong bearish candles. Notice no wick rejection to the downside. Very strong body. Price is pushing, and we're closing pretty much at the peak point. We then immediately lose a bit of strength from this candle. Immediately, we print a large wick rejection candle. Price met something. Something's happened in this level. Maybe buyers have stepped in. Maybe people are taking profit. It doesn't really matter what you believe, but price has slowly lost a bit of bearish momentum. Gradually, on the next candle, we lose a little bit more. To be fair, this candle is actually a little bit stronger. But again, you can see that gradual shift in momentum. We then print a very indecisive bearish candle. So price really attempts to make a final push right here, and we're unable to break lower. We then go from weak bearish to slightly stronger bullish. So again, we print that same sort of indecision depletion candle right here, but this one slowly shifts bullish. Right here, another very, very indecisive bearish candle. And again, this is showing you that price is really trying. It's really testing these lows. It had one final attempt to really push down, and it's simply just unable to gain the volumes, unable to gain that confirmation to really push there. And again, eventually, if you're in a trading session, if you're in a period where there's meant to be volume and price cannot push down, and it cannot push up. It can only move sideways for a certain duration. At some point, it's going to break. At some point, it's going to go in either direction. And if we can't push down, the only other direction is up. You see what I'm saying? So we then have that gradual shift. We go bullish. Again, start off on the weak bullish candles, and then the bullish candles get stronger and stronger until eventually you have that breakout movement. So again, right here, even this is not a perfect example of depletion, but hopefully you're following along with me so far. Again, it's that gradual sentiment shift, that gradual shift in behavior. Now, depletion doesn't necessarily have to take place over the course of a couple of candles. You may have it in a 3-pin formation like this one right here. So you may just have a strong bearish sentiment candle. It leaves a wick rejection to a key level. You then immediately have the indecision or immediately have a doji or some sort of indecisive candle, and then immediately a strong bullish engulfing. Now, usually, and again, this is just a general characteristic, it's not an actual rule, but typically speaking, it leaves 3 wick rejections in the same area. The middle one, or the indecisive candle, being the largest wick rejection, and the last sentiment shift. So as price moves away, you tend to get the smallest wick rejection on that last candle because again, price is certain in the movement, it's breaking out. Now, the context in which we'd actually be using this in, because notice how this is a bearish candle, an indecision, which I've left neutral because it can be either direction, and then a bullish candle. When would we actually be looking at paying attention to this? When would we actually be looking to trade this sort of formation? Now, bear in mind, I'm not giving you guys everything here. There is a lot more that goes into this, and there's a couple more tips and tricks I can give you. But again, I need to do separate the free content from the other content that people have paid for. So we're not going to be giving you everything, but I'm going to try my best to fill you in on what's actually going on here. Now, what kind of context would you be using this in? Again, bear in mind, we only trade price action continuations. We're looking to identify the trend on a higher time frame, structure, sentiment, dollar correlation, zoom in, find the key level, and wait to trade in that direction. So right here, you'd actually be trading this sort of movement in an uptrend. Even though it starts with a bearish movement, which would imply a retracement, you're trading this still in an uptrend movement. For example, let's say we started down here, we're in an uptrending market, pricing making higher highs and higher lows. We then have a nice large push to the upside like this one right here. Now, after we have a nice large push to the upside, naturally we have the retracement back down to the key level. So again, I've kind of messed up the lining up on this one, but let me just sort it out for you guys. Switch to white. Cool. So right here, for example, you can see we're in a nice uptrending market, price is making higher highs and higher lows. We then have a nice solid break above previous structure. So we draw a key level, like I told you guys in like lesson 3, episode 2, whatever. We then slowly start the retracement towards the key level, so previous structure. Then after price hits the previous structure, at this point is when you'd be looking for the depletion. At this point is when you'd be looking to see that sentiment shift. Again, it can be 3 candles, it can be this 3-pin formation right here, or it can be a slow sentiment shift. It can be a consolidation around your key level. It manifests itself in a number of various ways. Again, it all comes back down to understanding the characteristics of the instrument you're trading. When it comes to the indices, you're not usually going to get a long consolidated movement because price likes to tap and go. So usually on the indices, this is a very common version of depletion that you'll see. It's 1 candle, 1 indecision, and a 1 confirmation. And you would be entering on the back end of this confirmation if you're looking to take an aggressive trade. Granted, this looks a bit weird because the stop loss and whatever, but you see what I'm saying. Now, let me actually show you a live market example of this. So let me attempt to find something that I can actually give you a live demo of. Cool. So right here is another great example of depletion. Now, this kind of comes into what we're going to be covering next lesson, which is like fair value gaps and inefficiencies and whatnot. So it does kind of link some of the concepts, but this is another great example. Now, granted, this is not a trade I would have taken because it took place very late in the evening. But like I said, I'm just showing you an example just so you guys get in your head what it is I'm talking about and the context we'd be using this in. So again, this is a strong trending bullish market. I'm not going to zoom out and show you guys. You take my word for it. Strong trending bullish market. At this point, and again, this is on the basis that you're following the trading plan. You started on the daily. You've got on bullish market structure, bullish market sentiment. The dollar is correlating, is in line. You've zoomed in. You've tried to locate a 1 hour point of interest, and you've zoomed in and you've located a 1 hour point of interest. For this scenario and this specific setup I'm showing you, your 1 hour point of interest would be this little fair value gap, this imbalance in this candle. Now, usually I don't actually trade the imbalances themselves, which is why I wouldn't trade this move. But the idea is that this would usually be a point of structure. So I know we don't have a point of structure here, but just use your imagination. This would usually, and again, I can find you an example like this, but there's no point just cherry picking. But usually that would be just previous structure, the previous high, and that's where you've drawn your zone from. But right here just happens to be an imbalance, so we'll just use this for the example. Now, price has had a strong bullish breakout. It's had a nice strong sentiment push to the upside. So you know the price really wants to push higher. You've done a higher time frame analysis. Everything on a higher time frame, the correlation, everything's telling you you want to buy. You want to take price higher. So as price begins to calm down on itself and it comes to pull back on itself, what are you looking to do? You're looking to identify an area in the market, a key level, point of interest that you're anticipating price is going to come to, hold that level, and then push back in your direction. That's all it is. That's literally what every strategy is about. Is just trying to find a level of price. You're not going to break it. You can catch a decent entry and trade back in the original direction. So that's essentially what this is right here. Now, again, coming back to depletion, notice strong bearish movement. Bearish impulsive again. We're not leaving any wick projection. Well, we are, but not very strong wick projections. Large bodies. Very strong bearish movement to the downside. Now you're going to see that as price begins to approach our point of interest, what happens to the size of the candles? What happens to the nature of the candles? Well, we immediately start to show rejections. We immediately start to behave like there's something going on in this area. We're no longer showing that same super strong bearish sentiment that we were showing 10, 15 minutes ago. We're now printing rejection candles. We're now slowly beginning to lose some of that bearish momentum. Price tries to push one more time and actually retest the lows. And again, we're just still unable to break this general sort of zone. So at this point, when you can see like 5, 6 wick projections here in the same area, the same level, reacting off your key level, you know, okay, cool, there's a pretty good chance that price has held my key level. So what you'd be waiting to do is you'd be waiting to see one or two things. Either a strong bullish candle back in your direction, like a very strong, like engulfing candle, or you'd be simply waiting for the creation and the break of some structure. So in either case scenario, you would be looking for either this. Oh, I'll go to messages. No, let's not do that. But yeah, in either case scenario, you'd either be looking for your sentiment shift candle, which for me would probably be this one right here. Because again, at this point, price has had a nice gradual shift in momentum. We've then printed 3 consecutive bullish candles. And to me, that shows that, okay, cool, we're now on our way back up. Combine that with the fact that you already have a higher time frame bias, you already know that price is trying to push in that direction, and there's a very good chance that price is now ready to push in that direction. If you don't want to take the aggressive trade, if you don't want to take the aggressive entry, your second entry would always be on the change of character or the break of 5-minute structure. Right here, the break of 5-minute structure would be this candle right here. Now, some of you guys may not know why it's this candle, but if we're looking at this little 5-minute structure right here, this 5-minute behavior, this little bullish candle, this little retracement would be the 5-minute high. So as we come up and break it, that right there, oh, kind of messed it up. But yeah, that right there would be your 5-minute change of character. It's this little level right here. And that would be your entry. And again, the idea is that you're trying to take price higher and continue that movement, etc. All right, so just to recap today's session, depletion. And again, this is the main context that you're using depletion in. Now, I know this is just a schematic of some lines I've drawn on the chart. And again, it's never going to be clean in a live market, but it's the general idea and it's the context that you're using it in. So again, combining all the things that we've learned up until this point, starting off in a daily time frame, market structure, market sentiment. Before you do anything, market structure, market sentiment, then correlate with the dollar. Granted that these main three things are in line and you have a strong directional bias, and the price action is looking clean, you know it's a nice trending market, you then zoom in, find a 1 hour point of interest. Currently, I've only shown you one way to find the 1 hour point of interest, and that's based off of key level. There are many more ways, and I'm going to be showing you a couple more ways, but again, separating some of the content. But just find a point of interest. Again, key level does fine, previous point of structure does fine. You don't have to overcomplicate it. Tomorrow's session will probably be going through like fair value gaps and some stuff like that anyway. So you'll be finding some other ways to find a point of interest. But usually 9 times out of 10, your point of interest is previous structure. So cool. You found a nice trending market. You've got a higher time frame bias. You found a point of interest. You've seen price break above your point of interest, and you're now simply waiting for the retest. Because again, that's what we're here trading. We're trading a break and retest. Everything's just about finding a better break and retest. So cool. We found the break. We're now waiting for the retest. Now we don't immediately enter on the retest because that's how you get violated. That's how you get caught lacking on a fake out movement. That's how you lose money. So once price comes back to retest the point of interest, at this point, you're looking for that depletion. You're looking for that slow sentiment shift. You're looking for that gradual change in the behavior. And as it taps into your key level and it shows you that depletion, you're entering off of one or two ways. You're either entering off of the anticipation that price is now going to continue higher. Granted that you've seen some sort of depletion, you've seen some sort of confirmation that price is holding your level. Or you take the confirmation entry, which means you're waiting for that little 5-minute creation and break of structure. So price forms a little 5-minute high, retest the low, and then breaks above it. And again, by break of structure, I mean body closure, not wick projection, not like very shitty, like strong body closure. Again, this whole confirmation, this whole entry is based off of identifying the candlestick behavior. So if you're not entering off of a strong bullish behavior candle, you're not entering off of the right thing. You see what I'm saying? So regardless of how you enter, your stop loss always goes below previous structure. Not below this low, because that's retarded. It doesn't need to be this wide, but below the previous low that you just set. Now, we still haven't covered things like liquidity grabs and stop hunts and like some other concepts that you may want to take into consideration when setting these levels, but we are going to be getting into that as the session progresses. But essentially, this is the foundation of it. Currently, this is it. For the time being, between now and next session, which may or may not be tomorrow, because I do have a pretty packed day tomorrow, but regardless, between now and next session, go ahead and just backtest this. Backtest the break, the retest, waiting for depletion, and reacting to the depletion. Now, again, depending on what you're trading, it's going to look different. It's going to behave differently. It's going to take a little bit of time for your brain to adjust. Okay, what is depletion? What is wick projections? What is just accumulation? Like, what is the difference between them? And you're going to have a little bit of trial and error. But that's why you need to go ahead and actually just sit there, backtest this, and actually look for this in a live market and see how you can apply it to your personal system. But that's it for the video. There was a couple other things I wanted to cover, but again, I noticed the video is getting long already. And I want to start to slowly shorten these video times so we can get more out there and to get more consistent with it. But yeah, anyways, let me know what you thought about the lesson. Let me know if you've got any questions in the comments. And hopefully the camera didn't bother you guys too much. And that is it. I'll see you guys in the next lesson.